Hey guys, it's the Crypto Cowboy with the Friday morning chart review here. It's about 8:45 Chicago time on the 11th of October. And just taking a quick peek at the charts after the last night developments. We did indeed have a nice spike up into 8,800 level. And I was offering this as an alternate count. We keep an eye on it, obviously, because like I've said before in my other videos, until we definitely break above this trend line and above this wave B top here, we could still grind lower into this correction. However, the fact that we stopped and we tested this level about 3 times and we bounced here, gives me some confidence that we might have reached the low. So I'm not going to dismiss that either. So basically, it could be everybody's game. I don't think, we have a clear direction just yet. But I just want to monitor all this so I, gain, as the market develops further here and gives me more data points to plot onto the charts, we can gain more confidence in which count proves to be correct. So basically on the bearish one, and I have a couple of versions here. This is the red count and then I have the pink count. We are looking at this being a WXY, with this being a 4th wave pullback. Now, you guys know that, markets tend to have a proportionate look, and, that's one of the characteristics of, working with Elliott wave. Besides, before even looking at the time relationships, the guideline of the right look, it's very important. So if you look at this 4th wave in green, if it's a flat in B, if it's a flat in 4, then, we have to compare this to a similar wave here. So if this is a wave 2, then this wave 4 looks quite disproportionate. If I'm making this wave 2 all the way up here, I have a hard time counting this as a 3rd wave. Now, there might be a way where I can put a wave 1 here, wave 2, 3, 4, and 5, and consider this whole consolidation here basically a wave 2. And then just go like in an A, B, C, some kind of a flat happening here in a wave 2 completely. So this is a 1, a 2, a 3, a 4, and now we're doing a 5. In this terms, it's possibly that this is a wave 4, but even then it's very disproportionate. So this kind of guides me to the next count, which is the pink count, where it says that we are basically in a B wave and still having to do the C wave down. So after you have a W and then you have a big triangle the next wave, then we're dropping down in a 1, 2, 3, 4, and 5 for A. Then you have a B and then you have a C wave down. And 100% of that comes in at about 65.92, where wave C and wave A reach equality. We have a Y versus W, 100% equality between these legs here, Y and W. You have it at 6,800 as well, and then you have a pullback as a 4th wave at 50% here at 6,800 as well. I'm not sure what the 2nd wave pullback could be at, but I can look at the other count and give you what the fib relationship is in case this is a 2nd wave and not a 4th wave. So basically on this count looks just cleaner and more proportionate. But for this one to kind of gain traction, we definitely need to break below these levels. So this is very important here. Also, kind of, if you want to look at this as a flag and just going up like that, then we want to see a clean break below here. And then we should probably keep going lower to reach these levels, where I'm assuming there'll be much, big buy orders to get into here and to start moving up higher. This would be a level where you would have a nice, risk reward. But let's say, for the sake of the argument that we go down there, I wouldn't just start buying right away. I want to see some kind of an impulse happening here before I start buying, and, have stops obviously below, maybe below the swing low or whatever the market will give us once it gets down there. All right, so this is how I would play basically this count. If we're turning and moving up higher above these levels, then, and especially this 9,300 area that's here, then, because if you look at it, this wave B it's basically only pulled back. Let me just get out of here. Only pulled back like 50%, which is fine. Usually they can go up to 618, and that's a 9300 as well. So that would be kind of an even better pullback into this wave B. If somehow manages to get all the way up there, and then we have a sharp rejection down. So I'm entirely okay with that. That's why I think this 93 level is very possible. If the market is just completely reversing from here, from 50%, that's fine as well. But you know, in terms of playing this from the short side, you know, if we penetrate this 93, 9400 level, I would definitely get out of there. Now, you do have this trend line that can provide some resistance up here, but I think once we get above this 618, then you have the 786, and then if you go about, you know, if you go above 9800, then it's getting very, very risky to remain short. Okay, so this is basically what I'm seeing right now on this counts. Either a wave B pullback or a wave 4 pullback. The implications are kind of the same to the downside. But on the bullish side, I was looking at this, and we've had the other counts this morning, you know, that I had to rearrange a little bit here. But basically, what we're looking at is a complete move here into a wave 4 on a larger scale, and then we're looking for this larger wave 5 to start developing, and I'll show you that really quick on a 6 hour. Right? So you have a W, X, and Y with the complete structure, A triangle, B down, and C, we're done. And then we're going a 1, 2, and we'll start developing the bullish case towards the top side. And for that, you got to see a series of 1s and 2s and impulsive moves. Now, we do have something here that looks like an impulse, right? So that's a first wave. Even on the bearish count, this would be an A wave. So you'll be an A, B, C, or this is a 1, 2. So you go in a wave 1. You have this deep pullback in a wave 2. Quite disproportionate, right? You go 1, 2. And then you have another series here because this looks pretty impulsive. This looks impulsive. So you have a 1, 2, and then you can do a 1 and an ABC extended flat in 2. Now, here is a situation where you have a 1, 2, 1, 2, 1, 2. That means, and you guys know, I've been repeating this a lot of times, on these situations like this, third wave are very sharp. And if the market doesn't give us that, if the market just keeps, you know, grinding and doing a bunch of sideways nonsense and stuff like that, then I don't like that, okay? Because you would expect after a 1, 2, 1, 2, the market to sharply move up higher. On the other count, this is the orange count, and then you know, because this way you can kind of go, you have a 1, 2, very small 1, 2, 3, 4, and 5 for 1. You have a 3-wave move down in A, which is an ABC. Then you have what it looks like a 3-wave up in B. You have an A, B, sharp C. So that's a 3, 3, and then you have a 5-wave move down in C, which, you know, gives you the kind of a completely flat move. But if you know, you can come a little bit lower here, but I wouldn't want this wave C to get so disproportionate compared with this wave B or this wave A. You know, there are those Fibonacci rules there as well. And if you drop below 81.35, then, you know, I got trouble counting this as a second wave, right? It's not possible. So the other count on the red one, I'm sorry, on the blue count here, what I've done is like you can go in a 1, 2, and then you can have another 1, 2 coming down, because this can be considered a nice 5-wave impulse up. You have a 1, 2, 3, 4, and a 5, and that completes a sub wave in wave 1 of a larger 1, 2, 3, 4, 5. So for this one, you can get the pullbacks into a 50%. We just hit here to the pip at 8,300. If the market wants to start bouncing from here, we want to see evidence of that. If it wants to come down to a 618, that's about 81.79, which is, you know, kind of close to the strand line, even a dip lower to 786. But anything lower than that, it would start to be problematic. And then you have the line of less defense, which is the 7,900 level, and anything below that starts to be aggressive to the top, to the downside. All right, so this is kind of how I would read the charts this morning and what I would look at this. And that's what I said. There could be an opportunity here for a long if the market starts giving us signs that it wants to turn. So it might slide a little bit lower here and just toy with this trend line. If we're dropping below this 8,100, I would start to get worried. And if we're dropping below 8,000, definitely I don't want to be in that anymore. So this is what I'm presenting to you this morning. So that's what we're seeing. Okay. Another thing I wanted to say, thanks for watching that video with the triangles. And I know that's a converging triangle. And there is a way to measure when you have, for example, running triangles, which is a little bit different, but a lot of people are confused in how to measure that, then I'll show you in a consequent video. And then I also do a video, I think somebody in the room asked about how to measure, how to use the Fibonacci trend time tools into I think TradingView, and I'll make a quick video on that. It's quite easy. So all right, thanks guys, and have a great day. Hey, if you like this, just give me some thumbs up. Again, come and visit us into our crypto channel on Telegram, and we do more discussions there and more charts and stuff like that. All right, thanks for your attention. I'll talk to everybody later. Bye.